to say, I mean, I love the fact that there are people who are interested in coming hearing me speak. That's very interesting to me. And I'm so happy that we had the opportunity to broadcast live to the Facebook world, because a lot of people wanted to come but weren't able to. So with that being said, we are going to be talking about funding options to help with senior placement, or to help bring people into the home. As Lindsay was saying, they are an in-home care agency, a non-medical in-home care agency. So I want to be interactive with you, and I have some questions. Okay, how many of you, show of hands, know the difference between Medicare and Medi-Cal? And in most states it's called Medicaid. How many of you know the difference between those? Great. A lot of people don't know the difference between Medicare and Medicaid, and the differences are: Medicare is something that seniors 65 and older are given to help with hospital costs, medical costs. If you're under 62, a lot of times you can get it under 65 if you've been disabled, okay? So if you have Medicare, typically, do you know that Medicare doesn't pay for all of your hospitalization? Does everybody understand that? Okay. Typically, a lot of people think that Medicare is going to pay for everything, okay? It doesn't, and that's why we're here today, because Medicare only pays for, and I'm going to read it, and it pays for services in a hospital, acute or subacute. Do you know the difference between acute and subacute? Okay, if you don't, I only see one or two. Acute care is a hospital setting where you go either to the emergency room, they triage you, they tell you that you don't need to be there, and they send you back home, or you are critical and you need to be in the hospital and they admit you. Medicare pays for that. A subacute is a skilled nursing facility, and a lot of people don't understand that because we call it a rehab facility. A subacute hospital it provides you with rehab, physical therapy, occupational therapy, speech therapy, IV therapy, things that you need to get better after that hospital stay. Do you know how you get to go into a skilled nursing facility? Raise of hands. Okay, so the only way typically that you can get into a skilled nursing facility for rehab is if you've had a 3-day qualifying stay at the hospital. Everybody understand that? You know what a qualifying stay is? It doesn't mean being in the ER for a couple days. It doesn't mean being put in a room under observation. You actually have to be admitted to that hospital to get that 3-day qualifying stay to go for. And you have to need something to stay there. Okay, I want to explain that because a lot of people don't understand. They think that Medicare says you get 100 qualifying days stay up to in a skilled nursing facility. And a lot of people think, oh, I had pneumonia or I broke my hip, I'm going to go to the skilled nursing facility now and I'm going to stay there for 100 days and Medicare is going to pay for it. That doesn't happen. Okay, has anybody had an experience like that? Okay, very scary when they say you're going to be here for 4 weeks and then all of a sudden they say, Mom's met her goals, she's going home now, and she's only been there for 10 days. And you're thinking, what do you do? Well, the reason they're telling you that is Medicare has guidelines and they tell you what you can and can't have in the skilled facility. If you meet those goals that they give you when you come in, they can't keep you there any longer because Medicare won't pay. Okay, convalescent home is what our parents and their parents used to call the old folks home. It's also in that building that we call a subacute hospital or skilled nursing. Professionals call it SNF. You would then, if you couldn't take care of yourself, you have options. And skilled nursing is one of those options. You can move from their subacute hospital setting to the other side of the building, which they call a convalescent home or long-term custodial care. Has anybody heard that term, long-term custodial care? Okay. Everyone usually thinks long-term custodial care has to be done in a skilled setting. That's not true. Long-term custodial care, by definition, is someone needs help with activities of daily living. Anybody know what activities of daily living means? Can you just throw out some words of activities? Dressing, cooking, continence, helping, transferring. That's great. That's great. So for me, people don't understand when the discharge planner says, okay, you need skilled nursing, first of all, that's from the hospital. They don't want to go there because our parents, grandparents, they're thinking convalescent home. They don't realize that there's a difference and that one side is Medicare rehab and it's only a short term and that the other one is long term. So how would you pay for that? Okay. There are a couple of different things that we can do. So things that aren't covered by Medicare are extra charges if you happen to be there on Medicare for rehab. They won't give you a private room. They don't take you to the doctor for routine tests and exams. You have to get transportation to your doctor for that, on your own. If, say, you have an eye appointment or something and you're in the skilled nursing for a while. Routine foot care, eye or hearing exams, immunizations other than the flu. They can give you a flu shot. And personal convenience items. They don't do that. Okay. So we have a couple of different options for long-term custodial care. One is the skilled nursing, and we'll talk about how that's paid for in a minute. Another one is assisted living. Okay, do you know the difference between, there are actually two assisted living types. Do you all know what assisted living is and what it provides? Yes, no? It's a wonderful setting. I'm sorry? Well, assisted living, you're right. I like that. You're right. Care at home is assisted living, but we're talking about facilities licensed with the State Department of Social Services. They have two settings, and they're both licensed exactly the same through the same agency. And what they do is they provide assistance with activities of daily living. Those daily living things that we need, we all talked about bathing, dressing, ambulating, transferring, cooking, providing meals, providing medication management, things like that. Those are all private pay, okay? So that's where we're going to get into this funding options. Non-medical in-home care, as Lindsay and her father provide through Right at Home, private pay. This is not covered by Medicare. It's not covered by Medi-Cal, except if you're going into a convalescent home, and I'll explain that later. So there are two types of assisted living. There's a large apartment-style setting with lots of socialization, lots of activities, a formal dining room. Usually they have great chefs. They're wonderful places. I already have mine picked out. And then there are smaller ones. They're called residential homes for the elderly. They're licensed under the same Title 22 portion of the Department of Social Services, but it's a smaller home setting where there are only 5 or 6 people, you have your own bedroom, and you share communal living areas. But they provide everything, and you have more one-on-one care there. So it's a great setting for someone who really is not a social person, who's older, who has problems, either wheelchair-bound or needs help transferring. It's a better option than the larger assisted livings. So now we talked about non-medical in-home care, which is great because you have one-on-one. Your senior loved one has one caregiver who is providing all of your activities of daily living, companionship, laundry, all of those things. And it's wonderful to be able to do that. But out of all the types of care that I just explained, what's the most expensive? Which kind? The in-home care is exactly. And you know what? It's a great way to start and get a senior used to having somebody else help them. I love in-home care. I do not like taking people out of their homes. I do not like seniors leaving what's comfortable. If they can stay there and it's affordable, even if it's only 4 or 5 hours a day to start with, that shows them that you are on board with keeping them home as long as possible. And that's what I try to do as well. When that's my role, I try to keep my seniors at home as long as possible because that's where they feel safe, okay? But that is the most expensive way to go. And so hopefully there are some options here. So how would someone begin to pay for these services, okay? So I'm going to tell you where to look for things. So what you want to do is you want to look at the senior's income, because that's number one. Because everybody says, how do I pay for these things? Well, you might not know that your senior loved one, your mom, your dad, whoever it is, has $3,200 a month in income. And if you're looking at placing them or bringing in-home care to them or some kind of care, a lot of people take their parents home and realize, I can't do this, So you want to look at their income first. Social Security is usually one of the incomes, some kind of pension. They could have some kind of IRA or other retirement benefit. What you want to do is you want to look at their bank statement to find that money first, because that's going to be where you're going to start. That's your starting point. Look at their bank statements, see what deposits are automatic. Most pensions, most Social Securities, most interest earning is automatically deposited into those accounts. Most seniors don't do a check and then have to go to the bank because they can't get to the bank most of the time. So that's where you want to start looking first. Also, if you are looking on their paycheck, if there are PERS, STRS, railroad retirement, federal retirement, post office, they offered about 20 years ago, they started offering long-term care policies to all employees. If they have a long-term care policy that you don't know about, it will be deducted from that pay stub. So typically you get your Social Security or your pension deposited, and then your pension sends you a little statement saying this was deposited on this day. Look at that and it'll tell you if they're paying for a long-term care policy that you know nothing about. Or maybe they have dementia and they forgot that they bought this policy. And this is helping you help them. And what you want to make sure you tell your senior loved one is that you're trying to find a way to help them stay home safely, and ask them to share that information with you. I can't tell you how many people I have talked to that have absolutely no clue what their parents' finances are about. Either the husband or the wife doesn't know the husband died, but the husband says, no, I don't want anybody to know. That's where you have to start, okay? Does that make sense to everybody? Anybody had that problem? Anybody online have that problem of not knowing where money is or if they have any money? Okay? All right, so long-term care insurance policies, you want to look at them, you want to see what they actually cover. 20-something years ago when they started the long-term care policies, they wrote them for either in-home care or convalescent care. Anybody know why? Does anybody know why they wrote them that way? Because 20 years ago, assisted living and the group home settings were not around. Or they were around, but they were so new that the insurance companies knew nothing about them. So they wrote these policies for a convalescent home, skilled nursing care, and in-home care. Okay, so you find the policy, you look at what it's written for. Since the onset of the assisted living and board and care settings, a lot of those agencies, a lot of those insurance agencies have updated their policies and given seniors the opportunity to change and add. Maybe it costs a little bit more money, or maybe they could just switch it from convalescent care to assisted living. But you have to look at it, you have to talk to the agent, you have to call, usually you have to call corporate and find out. The reason I'm saying you have to do that is because a lot of times the seniors, they see something come in the mail from the insurance company and they don't know what it is and they throw it away, or they don't understand and they throw it away. So I've had so many of my seniors, I've looked at all the paperwork and there was a document saying, do you want to change to assisted living as well or instead of skilled nursing? And they've never responded to it. So what do we do if that happens? No, that's what I'm saying. A lot of the question was, don't you need both? A lot of the policies that were written, Bankers Life, Genworth, policies like that, were written before assisted living was a viable option. So they are written as just convalescent care or in-home care.
Yeah, facility only. Or
Right, but facility meaning skilled nursing, you have to read the verbiage. So a lot of the policies, and even for us, I have a long-term care policy and nowhere on there does it say skilled care. It's either in-home care or assisted living, one of the options. That's what I opted to get. And so buying a long-term care insurance policy is important as well for all of us to make sure that 20 years from now, we're covered and our kids aren't worrying about how we're going to be cared for. So, okay, the long-term care insurance policies, if you have a policy and you don't know how to interpret it, I'm more than happy to help you look at it and interpret it for you. But I have to say also, a lot of those policies, I have been able to successfully get them to pay for assisted living because the criteria is very similar. In a skilled policy, they want a nurse around the clock. Most of the assisted living facilities have a nurse 8 to 16 hours a day, and they can't give medications or do anything without a nurse or a doctor telling them and giving them an order. So I've successfully argued some of those policies, okay? So there is a way around it. The next thing, savings and investments. When you're looking at that bank statement, look for IRAs, look for savings, look for CDs, because a lot of seniors have dementia or are on the onset of dementia, and they forget what they had. My own mom at one time, she did not know what she had, and so we went to the bank and put everything in one place because she didn't know that she had other accounts all over the place. So it's very important for you to look at those things as well. And as soon as I get through this list, and I'm going to explain each one, but as soon as I get through this list, I'll explain why this is important. Anybody ever heard of insurance life settlements? Anybody else? Okay, an insurance life settlement we'll go into later, but there's a great opportunity to find money to help pay for care. And we'll go into that down a little bit further down. Anybody ever heard of reverse mortgages? Okay, and those are options too. We'll go into those. Typically, sale of a home or renting the home out is a way to get money to pay for assisted living. If you're not going to stay at home, then you sell the home. If you want to stay at home, the reverse mortgage is a great way to be able to stay at home, and because that gives you money that you don't have to worry about paying monthly rent anymore. Anybody know what IHSS is? Yes.
In-home supportive services.
Right, in-home supportive services. Does anybody know how that's funded? In-home supportive services. Anybody know how that? Anybody online know how that's funded? Okay, that's a state program. It's actually a national program, but we call Medicaid Medi-Cal here in California because we have to be different. And so Medi-Cal supplies the funds for in-home supportive services. And what that is an in-home care. They don't use that money to go to assisted living or board and care. It's only for somebody to come to your house. But there's criteria involved, which we'll go over. And then lastly, the veterans programs. Anybody ever hear about aid and attendance? Okay. Aid and attendance, this gentleman over here, who I forgot your name, Dave. Dave shook his head no. Aid and attendance is a program through the Veterans Administration. And it supplies money to veterans and their spouses, or widowed spouses of the veteran, to help care for that senior, whether it's in-home or in assisted living. And we're going to go through that. Any questions right now? Because now we're just going to go into how these different areas that I just discussed help you fund. Any questions? Okay. So mostly we started with monthly income. A lot of people think that they need $7,000 a month to do in-home care, or they need $16,000 a month to do in-home care. As I said earlier, when we're working with a senior, we do anybody who's going out, an in-home care agency, a geriatric care manager, anybody who's going to be working with you will assess the needs of that person. And if that person can stay at home and all they really need is meals, help cleaning the house, getting in and out of the shower so they don't fall. An in-home care agency, non-medical, they will come out 3 to 4 hours a day, 2 days a week, 3 days a week, 7 days a week. And that's a great way to start getting that person used to having somebody around the house. Okay? Yes?
I got a question. Everybody wants to stay home, and that's great. But nothing's been said about spouse who's going to be there around the clock watching their spouse sometimes deteriorate in front of their own eyes. Now, there's got to be a line there where you say, you know, I know you like to be home, but you're too much pressure. We can't have a round-the-clock person taking care of you, so if you have to go to the bathroom at 2 a.m., guess who's going to take her? Or her?
The spouse.
The spouse.
Right.
I think that might put a hell of a lot of pressure on.
Very wise man here. Okay, so his question was, who's going to take care of the spouse? When you're the healthy one and your spouse is deteriorating, I'm guessing that's what you meant.
Well, how healthy is the spouse?
Right, okay.
You know.
Right, depending on age. How healthy is the spouse? But say you have a senior couple living at home and one of them is declining faster than the other. So we bring in-home care for 4 hours a day. How is that going to help the partner in the middle of the night when that person needs to get up to go to the bathroom or has an accident or something like that? There are other options. If I were working with that couple, I would advise that couple to either move together to a facility where they have 24-hour care or place the person that needs the care and visit them regularly. And we'll go into that later,
No,
but
you're
that's
right.
a
We have
great,
Real close old friends that did exactly
Yeah.
what you just said.
right.
You know, Palmero up by Shingle Spring.
Right. And that's very important that
Sell their house.
right. Families acknowledge that, you know, I can't tell you how many people said, I am going to keep my mom at home till she dies, or I'm going to bring her in with me because she can't be alone. And if the funds are available, staying at home as long as possible is mentally better for the resident as well. And we want to make sure that everybody's happy. But at some moment in time, the family has to step in and say, we can't do this anymore. Or the spouse, the other person that's taking care of, the caregiver, has to put their foot down and say, I can't do this anymore. I've done it as long as possible. Okay? Does that make sense? So our goal is to provide care for them as much as possible at home. When that doesn't work anymore, and you know when that doesn't work anymore, we have options, other options for that senior. Okay, so the monthly income is huge, knowing how much that monthly income is. And these are things that I usually, when I'm talking with a new person, I actually give them a list of things. Check out the monthly income, check out the pensions, check out the savings accounts. Long-term care policy, we briefly touched on the long-term care policy. What you want to do is you want to find it, you want to look at it, you want to see if you can interpret it. If you can't, call the agent, ask them, call a geriatric care manager, somebody, family member, have them read it, because you want to find out what it's going to pay for, because that's going to guide you in the right direction, okay? Savings and CDs, when I said monthly income. So say somebody has a monthly income of $3,200 a month, and they have, you know, $50,000, $80,000 in a CD. Well, depending on their medical condition, depending on what, you know, what services they need. If they're still walking around and they're still ambulating and they just need somebody to watch over them, great, in-home care. Use their monthly income and supplement with those savings if you have to. My guess is, Lindsay's in the back, I'm just going to throw out numbers if I'm wrong. For 4 hours a day, you're probably looking at about $100 to $110 a day. So if you do that, there's $3,000 a month right there if you do it 7 days a week. A lot of times families do, to start out with, they do 3 days a week. And then if they see they need more, they go to 5 days a week. And families supplement on weekends. And that's a great way to make that money last longer and work together. Anybody have that problem online? Okay. We have somebody monitoring you, so if you have questions, go ahead and ask. Okay, so the savings and the CDs and the IRAs, those are where you're going to bring a lot of the stress on your brain off, because that will supplement you, okay? Insurance settlements, we touched briefly on insurance settlements. A lot of seniors have these life insurance policies that they got 25, 30 years ago, and they've been paid for, and they bought them because they didn't want to die and leave their spouse without something. And maybe the spouse has already passed away. So that insurance policy is pretty much gold, because you can get somebody who's interested in continuing, and sometimes they may even be continuing to pay for them. Those insurance settlements, They pay your insurance, your premium monthly for you, but they give you a lump sum for your policy and they become the beneficiary. Makes sense. They're going to now pay for it. They're going to give you money for it. And then you have a lump sum to use along with your monthly income, and you can pay for care. Does that make sense? Anybody ever done that? Heard about it? Okay. It's a really good way to supplement somebody who needs extra money. And as I said before we started this, I have lists that I'll give to you with people that you can call and talk about it with. Reverse mortgages. Anybody have a reverse mortgage or know someone with a reverse mortgage? Have one or know somebody? Know someone? Okay. Okay. So years ago, they were horrible. They were horrible. And when people said that to me, it scared me. But in recent years, with the federal government getting involved, the reverse mortgages are a really good option for somebody who wants to stay at home. And the reason is that, okay, I'm just going to read this because I got this online. Okay, a reverse mortgage is a type of home equity loan that's reserved for older homeowners and does not require monthly mortgage payments. Instead, the loan is repaid after the borrower moves out or dies. Okay, so say you have a house that's worth $400,000. You could put a reverse mortgage maybe for $200,000, and you either get a lump sum or you get monthly income. So you work out what is their income, how much savings, all of those things if they want to stay at home, and how much money would you need monthly. Okay, you can do that yourself by getting a lump sum and then taking what you need monthly, because sometimes situations change. Sometimes you start with in-home care and they need more care, or there are things that in-home can't do. Okay, so if that happens, then you have an option to move somewhere else. And if you've done a lump sum payment, then you can use that money the way you need to or want to. The thing about it is that years ago, I don't know how they were written, but families, ended up losing the homes, and that was very, very awful. Now, when the home sells, say you take a reverse mortgage and you owe $200,000, and now the house has gone up to $600,000. The family just sells the house, they pay that $200,000, and they get the balance. So they're not losing any money. Okay, do you guys know that? Okay. And I don't know, someone told me, and I'm not the professional, that's why I'm going to give you a list of professionals, that you can do another reverse mortgage on the same house if you outlive that initial loan. They just redo it, okay? But you have to know how much the house is worth. So on this sheet of paper I'm going to give you, it says, and I think we can post this online as well, it says, we have a appraiser. So you might want to talk to an appraiser and find out how much the house is worth. You also want to find out if mom and dad took an equity loan or something on the house that you don't know about. I can't tell you how many times I've worked with families that a family member needed money and they got mom to take a loan on the house, and they're making monthly payments that the person that's trying to help take care of mom knew nothing about. So you want to look at all of those things. Selling their house because one person needed more care than the other person could give at home. So that's why we sell houses, so that we then have a big lump sum of money. Hopefully the house is paid off. We have this lump sum of money. We have our income. We have our IRAs, our pensions that we supplement from the sale of the house. And if you have a good care plan, typically that should last you through end of life, okay? Other times people don't want to sell the house. The person that we're working with says, no, I want to leave the house to my kids. Okay, but you need care and you can't afford in-home care. So we talk to the family about renting the house out. Sometimes you rent it out to a family member. Sometimes you rent it out to, somebody who puts in an application. What I would recommend is, if you're going to rent the house, have a rental agency deal with it. Have a rental agency that's going to clean it, that's going to take care of the property, things like that, and screen the people who are going to be coming and know that that rent is going to be paid. Because if you can't stay at home, and say the person needs 24-hour care and you cannot afford 24-hour care, you just can't. So that's why you would rent the house and use those funds in conjunction with whatever your funds are, and move to a setting where you will get the care you need. Okay, does that make sense? But if you're trying to do the rental yourself, trust me, I have a rental. If you're trying to do the rental yourself, sometimes you get bad renters and you don't get that money. And then you're owing over here and this money's not coming in. So it's very, very important to be very cautious about renting the house to somebody who is trusted and you know is going to pay those bills, okay? Okay, so we're gonna jump to in-home supportive services, Medi-Cal, Medicaid. Okay, so it's a government program and it's a needs-based program, meaning mostly indigent. Mostly you can only have, if you're going to have Medi-Cal and you're going to have in-home supportive services, you have to have less than $2,000 in your bank account. If you're at home, you can own your home and you can have a car if there's like a husband and wife situation, but they combine your income. And honestly, I know enough to be dangerous. I don't know what the combined income is. I do know that I've had seniors with $1,500, $1,600 a month income and they've qualified for in-home supportive services. That's just a real broad, guesstimate of what it is. But the problem with Medi-Cal is, and the in-home supportive services, is that you have to use their chore worker. They work for the state. They don't work for like Lindsay and her organization. And you have a social worker from the government, from the state, who does the evaluation and determines how much care you're allotted and how many hours a day or a week you can have. Does that make sense? So you really have no control over, you might need somebody 7 days a week, and they might say, we're only going to pay for 2 days a week, 4 hours a day. What do you do then? Well, a lot of times family will take that, okay? And then they will come to someone like Lindsay and right at home and supplement out of their own pockets, okay? Because the criteria for Medi-Cal is very, very sticky. You cannot give that senior money because it'll show that they have more money and not qualify. So they take what they're allowed to have, and then the senior, if they need more care, the family supplements that, okay? So it's a very sticky situation, but it's not a bad thing to have Medi-Cal and have in-home supportive services. That's a starting point, just as we were talking about right at home coming in to help take care of somebody and work on getting that person used to having somebody around, used to asking for things. That's the key here, is that seniors don't want anybody to know how bad off they are. In-home supportive services, if you don't financially have those assets and you know that your loved one needs help, getting that in there as soon as possible can be really helpful. You want to do that. The thing is we talked about convalescent homes. The way those are paid, a lot of times Medi-Cal pays for that. And we'll talk about that in a minute. So if you're on Medi-Cal with in-home supportive services and you have them already, and you're already in their books, it's easier to transfer that Medi-Cal to the long-term care side and go into a convalescent home. The Department of Veterans Affairs provides care to veterans in a skilled or intermediate nursing facility. Did anybody know that? Okay, so if someone needs to go, it provides both skilled and intermediate care through contracts with community nursing homes. So I have a senior who was living at home. His significant other was trying to take care of him best she could. He started having wandering issues, dementia, and we got him into a skilled nursing facility where VA was paying. He had no assets, nothing, there was no way for her to hire, and she was running a farm, so she couldn't just leave him in the house to wander around. So we got him into a skilled nursing facility, and the VA paid for him to live there in the convalescent side, in the long-term custodial side, okay? So when you can't afford to pay for care to come in, or you can't afford to go to a facility, for a veteran, it's a great deal. Yeah, and Yountville, which is Northern California here, is they probably got a 2-year waiting list. So you want to get on the waiting list as soon as possible if that's what you want to do. You want to get on that waiting list as soon as possible. Unfortunately, VA doesn't cover the spouse, only the veteran. But then we move to aid and attendance. And aid and attendance is a pension program. About 10 years ago, it was the best kept secret around. And basically what that provides is money for a couple, husband and wife, money for the veteran if the wife has passed, or money for the spouse if the veteran has passed. And it's a criteria, there's a criteria. I'm going to hand everybody the sheet here about wartime, things like that. And basically, in a nutshell, the veteran has to have served a minimum of 90 days. One of those 90 days has to have been during a wartime. And on my little sheet that I'm going to hand you here, it tells you what those war times are, okay? The dates and everything, okay? So if the senior spouse was in the service during one of those war times, and say you need in-home care, great way to apply. You want to apply for it. I have to warn you, though, that the length of time to get the check can be anywhere from 3 months to 18 months. But it goes retroactive back to the day you applied and were receiving services. So if you apply for your husband, for your wife and yourself, if you're the veteran, if you apply for the VA Aid and Attendance Program and you submit it, they're going to send you a letter saying you need all of this documentation, okay? If you work with somebody who knows what they're doing, all that documentation will be going with your application. That's the way you want to do it, because that way you can say already submitted, and there's less waiting time if you submit all the documents. Some of them just briefly, DD 214, marriage certificate. If the spouse has died, you need a death certificate. I mean, if the veteran has died, you need a death certificate. But you need a couple of things. You need a care statement and you need a physician statement. So if you put all of those things together with your application, the application goes a little more quickly. That's not a guarantee, though. But if you're supposed to get, say, I put rough estimates. A couple, approximately $2,100 a month. So if you have a couple who makes between them $4,000 a month and you have an additional $2,100 a month coming in, you could afford a lot of care in home, couldn't you? You know? So that goes retroactive. It takes 10 months, you're going to get a check for $21,000, okay? Because you've been paying out of your own pocket and you're just kind of paying yourself back. So a lot of times when I work with families, I say, you know, you've been approved. It could take X amount of months to do this. Can family come together and pay for these services and then pay yourselves back when you get that retroactive check? Does that make sense? It's very helpful to the senior, and that check is going to come once you get that certification letter. You don't get it unless you are receiving services, okay? For a veteran himself, it's approximately $1,800, and for a widowed spouse, approximately $1,100 a month, okay? So if you initially start with a husband and wife and the husband passes, she won't continue to get that $2,100. It will drop down to $1,100 for the widowed spouse, okay? And have to submit a death certificate, things like that. So the other thing is that if I haven't myself ever seen it, I had to write a statement of facts and sent a statement of facts that my client was on hospice and we got the check in 3 months, which is, I don't think I've ever seen that happen before or again since that time. So, but the other thing is that if you get the VA Aid and Attendance Pension, which is a needs-based program, and you can only get if you are receiving services in-home, assisted living, board and care, you can only get it under those 3 things. It's not income, and you don't have to claim it on your income taxes, okay? Because it's like a long-term care policy, but for vets, okay? Does that make sense? Okay, so you can use that for in-home care, you can use it for assisted living, you can use it for a smaller assisted living, which we call here in California board and care, okay? We have a question.
Is there an asset minimum that the VA looks at to qualify?
Yeah, well, I was going to kind of segue, great question. The question was, is there an income qualification? And yes, remember I said it's a needs-based program, just like Medi-Cal, although Medi-Cal has theirs in place, and they have a income verification. Medi-Cal goes back 3 years, 4 years, close to 4 years. 40 months, I think it is. And if there was money and it disappeared over that 4 years, and you place somebody in a convalescent home, you might end up owing that money back to them. So you want to be very careful. VA at this moment in time, that to my knowledge, has not instigated that criteria, but I know that, and I can't prove this, but my guess is that you have to supply income verification on that application. And somewhere on there it says assets. Do you own a home? Do you have a rental? Do you have an IRA? Do you have, what are your pensions? How much money do you have in CDs? You have to give them all that information. And my thought process is, because there's nothing in writing yet for us, like Medi-Cal, that they look at it and say, oh, here's a couple, they have $150,000 in assets. Well, we're just going to stick this one under the pile because they could live for another 5 years and they don't need it yet. That's what I'm thinking is happening. It may not be happening. That's just what I think, because some of my clients get a check in 6 months and some of them don't get it for 18 months. And I think it has to do with the income. I used to work with someone very closely at the VA, and he said, 10 years ago, it didn't matter how much money you had. And even though it said needs-based, because nobody was using it. Now, if you have $30,000 or less, a couple, they're probably going to push you through faster. I mean, if you're 90, you look at everything. 90 years old, heart condition, diabetes, things like that. They have $30,000. They have $4,000 a month. Would they be running out of this money in the next 2 years? Probably. So they want to get that funded right away. If you're not during wartime, that's what this criteria page is. You don't qualify if you did not have your service during one of these times. Okay. Yes, that's what happens. So just because you were a veteran doesn't mean you're automatically going to get this money. You have to meet the criteria and the financial criteria, and they decide. You're at their mercy and they decide. But if you're not during, that's why I hand these out without all the rest of the paperwork, because it explains what you're going to need, it explains the dates, all of that information, so that you know whether or not you're going to go down that road. The question was, if you were in during wartime but you weren't on the front lines, or the question was, if you were in the service during those war times but you weren't on the front lines, you still get that because you served during a wartime. And we kind of went over that earlier, that 1 day has to be during wartime, 90 days minimum service to in that wartime period. But so say you signed up and Vietnam ended the following week, but you were in boot camp, you've got your 1 day during the wartime, but you don't have your 90 days. Does that make sense? You have to have 90 days. So like you sign up, the war gets declared, over. You served 1 day, but you don't have 90 days during that, unless you stay in there. I don't know what happened. If you stay in the service, I only had this happen one time. I don't even know how he got out, but he signed up. I guess it was the Korean War, and something happened, and he ended up leaving the service. He didn't get 90 days. Maybe he was booted out of boot camp, I don't know. But he didn't get his 90 days. He had his 1 day during, and he didn't qualify. Because you have to have 90 days. No. Aid and attendance is for a couple, if one of them or both of them, because I've had a husband and wife that were both veterans. In that case, they would both get the $1,800. If they were both vets, they get the $1,800 apiece. Okay, it's not a couple. They both file, they both get the money. But in the case of husband was a veteran, spouse is still alive, they get the couple amount around $2,100. And that is, he has to have served 90 days, and one of those days have to have been during a wartime.
And they still have to be married. They can't be a
Right,
divorcee.
if you're, well, then we'll go to that. The veteran himself would get $1,800 if whether he's married or not. Because I've had couples that are married and only the husband needs help. The wife can still drive, she can still do everything. We wouldn't apply for a couple benefit if she's able to do everything, because we couldn't get a doctor to sign a report saying that she needs it. So that's the other criteria. You need a doctor to say you need that in order to get it. But in the case of a widowed spouse, you have to have been married to that vet when he died. If you were married to him and you got divorced, you get nothing. Okay? Make sense? If a husband and wife, say the husband gets $2,000 a month, this is for you, Facebook. We're doing a live Facebook feed for the new people. Anyway, we're doing, if the husband makes $2,000 a month, Social Security, and the wife only makes $800 a month, Social Security, if the husband dies, you can go up to his Social Security rate and you can collect his Social Security amount. There are grants. Now, the grants aren't on a continual basis. It's usually a one-time grant, and I don't know if it's every 6 months or once a year. But there are certain agencies, Alzheimer's Association, Del Oro, where you can, and there might be a couple more that I can't off the top of my head, but I can research it and put it on our website. But you apply for a grant. There's no income qualification or anything, and their funding is kind of takes like till October or something to determine how much money they have to give. But say you have somebody who your mom is at home and you're going on vacation, but you're her primary caregiver. You do her shopping, you do her housekeeping, you make meals for her, you set up her medicines, but you want to take a vacation. And she doesn't have immediate funds. You know, I have to call someplace to get, she doesn't have enough money, but you don't want to leave her alone. You can apply for one of these grants. This is, I want to say Del Oro, because I think Alzheimer's is more for dementia and dementia situations. But say you want to go away and you want to put her in assisted living or a board and care for a week or 2 weeks. You apply with Del Oro and they give you, I don't know, between $1,500 and $2,000 maybe. I don't know the exact numbers. I know enough to be dangerous. So I would have you call them directly. But they will give you a grant and you use that money then. They have a whole list of people they work with. You can do in-home care. You work with Del Oro all the time. So Right at Home works with Del Oro. And I don't know if you get the check or they pay it directly to the assisted living or the board and care or directly to in-home support or in-home care services. Okay, so Del Oro pays directly to Right at Home, and you can get somebody to come and take care of all those things that you were taking care of so you can go on vacation. So that's a great grant, okay? And Alzheimer's Association has a grant process as well, and they work with dementia facilities. And do you work with Alzheimer's as well? Or okay, so in-home care agencies, I've known about the grants, I just don't know the technicalities, but the in-home care agencies can come out and do the same thing, and you get the grant from the Alzheimer's Association. And there's no, to my knowledge, there's no income qualification or criteria. They're available, and when they're out of the money, they're not available. But you put your application in, and they'll call you when they've got funds again. Yes. Dave, one of our members here in the class, said that if you have somebody living at home and you need modifications to the home, there are agencies and organizations that can help. We have a list, I didn't bring it, I can put it on my website, of low cost and sometimes no cost modifications to homes for ramps, toilet, modifications, things like that. But yeah, we have a list of people that do those modifications to keep someone, and I'm sure Lindsay, when she has caregivers go at home, we do a safety evaluation. For anybody who's staying at home, we would go out, for my clients, I go out and then I give the paperwork to the in-home care agency. Typically, if they're going out, they'll do a safety evaluation of the home. Because just because mom and dad want to stay at home doesn't mean it's safe. Doesn't mean it's the right choice. I can tell you, I've gone into houses where I've had to like sideways go through stacks of things, not safe. So we have people who can go and help downsize. We call it downsizing, and basically it's decluttering. We have people who can do the ramps for somebody with a walker or a wheelchair. We get all the equipment. You can get equipment from Medicare as well. You can get a bedside commode. You can't get a shower chair, but you can get a bedside commode. You can get, but which doubles as a shower chair. If you put the seat down, you can put it in the shower. Although Target and all those places have shower chairs for pretty low cost. But they do for in-home care, and I don't know if you want to come up and talk about this, but they do a safety evaluation. They make sure, I go around pulling up rugs. I go, take that rug away, take that. We don't want a fall risk. I can't tell you how many times I've gone to a house that I've said, you have to move this, you have to move this, and I go back the following week and Mom has put everything back. Like, take it out of the house so she can't put it back. So, and then I tell them, if you want to stay here, you have to do this. Otherwise, I can't promise that you can stay here. But we do a safety evaluation, and then when we identify the things that need to be fixed, then we give our clients and their families low cost, no cost modifications and tell them where to go to get what they need. Okay. Does everybody know that Medicare pays for in their home rehab? Did you know that? Occupational therapy, speech therapy, all those things. Did you know that Medicare Part B will pay for that in home? So what we do, usually when I'm working with Lindsay or Dan, when we find somebody who wants to stay at home, we want to evaluate what they're able to do. And if we can get the doctor to give us an order, we can get a home health agency to come in and strengthen them right there in their homes, because we want to make sure that they're able to stand, they're able to hold on to their walkers, they're able to walk through their houses. And a lot of times, because they're alone, they don't have that socialization, they don't have somebody around all the time, they sit in one place. Have you ever walked into a senior's house and you see a TV tray here, and it's got Kleenex, and it's got pills, and it's got pens, and it's got crossword puzzles, and a glass of water or juice or something, and on this side is the trash can, and a light. Does that sound familiar? And then you can actually see on the carpet where they walk to the microwave to put their food in, and then they come back and they eat it. Anybody seen that? Anybody seen that? Does it sound familiar? Okay, so what we try to do is make sure that those pathways are opened up, that they have all the things that they need, and make sure that they're safe. So Lindsay, I know, I've worked with Lindsay, well, not with Lindsay, I've worked with Lindsay since she came on, but I worked with her dad since he opened this office. So I can tell you that they're very, very thorough with their evaluations and what the needs are. And if it's not safe for that person, what I usually tell my seniors is, and I tell their families, if you want to stay here, we need to make some modifications. Sometimes we have to do like a temporary respite placement in a assisted living or a board and care until we can clean the house out and make it livable, okay? And that's always doable. And we talk to the senior, say, we're not taking you out of your house, we just want to make your house safe. And sometimes the senior goes to stay with a relative, a family member or something while we're working on their house, okay? So it's really important that if you're going to do in-home care, you make sure that in-home care is the right option, because that's what I always want for my senior. I always want my senior to have that option as long as possible, as long as they're safe. So sometimes we can't afford in-home care 24/7. So we go to an assisted living. Maybe the person's really social and they like the activities, but maybe they have problems getting up and going to the bathroom at night, or they're a fall risk and there's not enough care in the assisted living facilities. That's a great way to work with an in-home care agency, that maybe they're having an awake time from like midnight to 4 a.m. You get in-home care to go to that assisted living. It's an out-of-pocket cost, because the assisted living, they can't give you one-on-one care. They can give you a call button, but if someone has to go to the bathroom in the middle of the night and they push the button, they don't necessarily want to wait 15 minutes or sometimes longer to get that person to come help them. So if we know and identify this person has fallen already, this is the time that we usually have this happen. In-home care can go to, non-medical in-home care worker can go to an assisted living and assist that person overnight if they have awake issues. Is that right?
Yes.
Okay. So that's an option. What happens when you run out of money? Anybody know?
Bad stuff.
Say you've come up with a care plan and you sold the house. Maybe you didn't make much money in the house because there was a mortgage. And maybe they only have $2,000 a month, but they really wanted to go to that assisted living, that really nice one up on the hill. They really wanted to go that, and their $100,000 went like that, right? And let's give them a little bit more money. Say they have $3,000 a month, and it costs $7,000 or $10,000 to live at that place, okay? And they run out of money. What happens? Well, two things could happen. One, we could look for a smaller residential care facility for them where they could go and live in a home setting for that $3,000 a month. They might have to share a room if they are higher care, but they might have to share a room, but that's a nice setting. If they don't want to do that, or they're too high care, or we can't find a shared room, then you apply for Medi-Cal. And Medi-Cal then would pay for them to live in a convalescent home. Okay, we talked about the convalescent home. It's in a skilled nursing building, and it's usually 2 people. Most of the time it's 3 people. I have seen as many as 4 people in one room. They will take all of the funds. If you have $3,000 a month, they will take all of those funds, and then Medi-Cal will pay the difference. Okay, and when I say all the funds, I think they leave like $95 a month in a fund so that they can get magazines, buy new clothes. Some people smoke, those things for incidentals. But most of that money that they have goes to the skilled nursing facility, the convalescent side, and then Medi-Cal pays the difference. What happens there is now they're living there, and Medi-Cal is paying for them to live there. It's not rehab, it's not paid through Medicare, but if they needed rehab, Medicare Part B would pay for them to have rehab, okay? If they fell and they fractured a hip while living there, they would get from that side to a rehab bed, have rehab, and then they'd have to get them back into a Medi-Cal bed, okay? Does all that make sense? So when you run out of money, depending on how much your monthly income is, determines where you're going to live. And if you have at this moment in time, I don't know what it's going to be like in 10 years, but at this moment in time, if you have between $2,800 and $3,500 a month, you probably could go to a nice, comfy, warm setting, which we call board and care. You'd have to share a room, but you'd give all your money to the skilled nursing facility and share a room with 3 people or 2 people, other people, minimum 1 other person, and end up being in a bed most of the time or a wheelchair in a hallway. And so to me, the smaller residential home is the better option.
Explain what that's like for anyone who's never been to one.
Anybody been to a bed and breakfast? Bed and breakfast. Have you been to a bed and breakfast? Did somebody say no? Okay, bed and breakfast is someone owns a home, they open up all their bedrooms for you, they serve you breakfast, there's a communal bathroom, and you usually come, it's better than a hotel. You come and it's comfy and it's got a fireplace and you can sit there and read a book. It's just got a front porch, a back patio, and it's like going to your friend's house and staying at your friend's house for vacation. And then you go out and you do things. Well, a board and care, which is an assisted living but a smaller setting, it's in a residential neighborhood. They usually don't take more than 6 people. Sometimes they have a shared bedroom. Some of them have private bathrooms. Some of them have communal bathrooms. But they usually have 2 people around the clock. They assist with bathing, dressing. They prepare all the meals. They do all the laundry. They dispense the medications. They're allowed to do all of those things, and it's in a comfy setting. All of the facilities that we call assisted living, board and care, they are all licensed with the state. And they have very, very strict guidelines. They can't do things like if you have somebody who is a diabetic, they can only go to these places if they can inject themselves, the smaller ones, or if there's a nurse that comes in to do that. A nurse has to do those injections. If they're a sliding scale diabetic, They're technically not supposed to be in assisted living at all. But a lot of the assisted livings have nurses that can do that for them, especially with dementia. And my big fight is, and I don't know how how to approach this, but you can ask your neighbor to come give you an injection, or your daughter, or your son-in-law, or somebody to come give you an injection. They're not a trained medical person. Why can't you train the medical techs at these assisted livings to do the injections? They don't want to do it. Those people would have to go to a convalescent. Okay, so dialysis is a Medicare question. That's funded completely by Medicare. Okay, Medicare pays for it. It's a carve-out, just like hospice is a carve-out. And if you're on dialysis, it doesn't matter where you live. If you have to go to dialysis 2, 3, 4 times a week, you're going to go there to the dialysis center and then come back to where you live. So the question was, don't assisted livings and board and cares provide transportation? Yes, a lot of times they will provide transportation. In an assisted living, it's a bus, and if you let them know when you have to go, you get on their van and they take you to your appointment, and then they'll pick you up. Smaller board and cares, if they've got enough staff, they'll drive you there. But Medicare is supposed to pay those agencies, the dialysis agencies are supposed to provide a van for pickup. What if you have someone who is indigent, who does not have the funds to pay for a transport? They're not in a fancy board and care or fancy assisted living. They have to get there somehow. The dialysis center where you go, they get paid Medicare dollars, and they are supposed to provide you with a van to and from. Or the statement was, 2 friends are veterans and they have problems, or they have to provide their own transportation. They're veterans and they have to go to the veterans to get their dialysis. That's correct. But the Veterans Administration should provide transportation for them. That's what I'm saying, is that they should not have to do that. And we're going to post, for you Facebook folks, we're going to post all this information online as well. We're doing a feed there. So, anybody else? We're going to shut down our feed, our live feed. Bye, everybody in Facebook land. Thank you all for coming. I will be around for a few more minutes if you want to ask more questions or set an appointment or something like that.